Here to join us is the guru of the green, Tischelle George. Tischelle is the founder of Mind Your Money. I love that name. Mind Your Money. Mind Your Money. Mind Your Money is a financial literacy program for youth and young adults, and she is going to teach us how to handle our coinage with care. And when I say us, I mean you and me. Forget the fact that she's a saving Saint Beverly and she saves a lot of money and can't save.
Always.
Yeah, totally. Come on, Tischelle. So happy to have you here.
Thank you. Thank you so much for having me.
So when I read your bio, I absolutely love the story of how and why you got started with Mind Your Money. So please share with our viewers what it's about.
Sure. So I didn't know a whole lot about money management when I was growing up.
Okay.
Money was always sort of a taboo subject at home. I just heard, we don't have it or we don't have a lot of it, so don't waste my money, essentially. Right. But then when I got older and I had to start making some financial decisions on my own, I ended up making a lot of mistakes, like running up a lot of credit card debt, bouncing checks, running up fees. It was financially painful.
Oh, goodness.
And so once I was able to recover from those mistakes, I just started asking a lot of questions and doing a lot of reading and talking to adults and started to, mind my money and figure out what I needed to do. And I started to share what I learned with my friends in college, and they said, well, hey, I wish we had learned this, and you should teach. I said, okay, well, I'll think about that. And I just kept talking, and eventually it blossomed into, a program where I am teaching young adults about money management.
What does it mean to be financially literate?
So to be financially literate really just means that you have a basic understanding of money management and money management terms.
So me and my mom, we were just talking about credit, and it was scaring the crap out of me. So tell our viewers, what is credit?
So credit is really just when you borrow money with a promise to pay. So if you have a credit card, that means that the bank or the credit card issuer is loaning you a certain amount of money, a credit limit, and you are promising to use that money and pay it back with interest within a certain period of time.
Great.
As I said earlier, I took a financial literacy course last semester, and the instructor recommended that we get credit cards. What are your thoughts on this?
So I think getting a credit card is a good way to help build your credit. If you think about it, your credit report or your credit profile is really like your report card. It's giving someone who's going to loan you money, an opportunity to see how responsible you've been in the past with managing that money and repaying the debt on time. So if you're going to borrow, if you're going to take out money, say for a car loan, for example, the car leasing company wants to know for sure that they're going to get their money back from you on time. And the way they figure that out is by looking at your past payment history.
At what age should we start building our credit?
So you could start building your credit as early as 18 with a credit card or with a loan.
Perfect. I'm 18, so perfect.
I know you have 2 sons. At what age did you allow them to get credit cards?
Well, my sons are actually very young. So my youngest is 8 and my oldest is 10. So they're not credit card ready just yet. But we do talk about money quite a bit in our household. And I started talking with them about money actually as soon as they started talking to me about it. And that might have been as early as, maybe 3 years old. And so when we're going to the store, if they're asking, to buy something, we'll talk about how much it costs or how much do you need to have it. They started, getting an allowance maybe, a few years ago. And when they have their allowance, they break it up into different sections of save, spend, and give so that they know how to use the money when they get it.
Okay.
Awesome.
So are all credit cards created equally? And what if I have a store credit card like Macy's? Would that help me build my credit?
So a store credit card, yes, can help you build your credit, but store credit cards tend to carry a higher interest rate. And so the interest rate is the percentage of the money that you have to pay back once you've used it. So the store cards do tend to carry a higher rate. Bank cards tend to carry a lower interest rate.
Can you build credit without credit cards?
Oh, absolutely. You can, as long as you're borrowing money, say for a loan, that's one way that you can, and paying it back, that's one way that you can build credit. There are also some other unique ways to build credit. For example, there are some places where, just by paying your rent, If you're paying your rent at a bank or something like that, the bank may be able to report those rent payments, and that rent payer may be able to build credit that way too.
Okay. What about prepaid credit cards or debit cards? Do those help build credit?
So no, unfortunately they don't. A prepaid card is not going to help you build your credit, and a debit card is not going to help you build your credit either, because those aren't loans that you're going to use and then repay. What could help you build your credit is a secured card, which you might think of as a prepaid card. So a secured card is one where you put down a certain amount of money and you basically establish your own credit limit, and then you borrow against that, and then you pay it back. Once you've paid it back over a certain period of time, maybe 6 months to a year, the bank could then give you a full credit card where they're giving you the money to borrow.
If debit cards, which you receive when you open a checkings or savings account, don't directly establish your credit history, what's the purpose of even opening the checking or savings account? Can't we just simply go to the cash checking place and just cash our paychecks? And
oh, you could go to the check cashing place, but then you'd be paying a fee and giving up some of your hard-earned money just to cash the check.
That is the worst part of cashing my check.
Because they
really
take
is.
It doesn't seem like a lot, but if you think about it, it's a lot.
It does start to add up.
Yeah.
And then if you have any bills that you need to pay and you start buying money orders from those check cashing places, the money order fees start to add up too. So the benefit of having a checking account is that you can just deposit your checks into your checking account for free, and you can access your money, your checks, your debit, all of that you can access for free. So it actually does end up saving you money in the end, and it gives you a safe place to store your money.
Thank you.
What factors should you consider when you're choosing a bank?
So there are a number of things that you should consider, but honestly, I think you can just go for convenience, like what really works for you. Think about how you want to use the bank. Do you want to go often, in person? Do you need to interact with the teller? Do you plan on going to the ATM a lot to make a lot of withdrawals? Find out what sort of features the banks are offering. And if you're a student, 18 or under, you can get a bank account for free with no fees usually, because many banks offer free student checking accounts.
That's great.
Okay, so now we're turning our attention to budgeting. What is a budget or spending plan, and what purpose does it really serve?
So a budget or a spending plan is really just sort of taking a look at all of your sources of income. So where's the money coming from? And then taking a look at all of your expenses and how much do they cost, and figuring out honestly whether you have enough income to support your expenses. And I always like to say you should also include savings as an expense. A lot of times what people do is they subtract their expenses from their income, and then if there's anything left over, they'll consider that savings. But then what if you don't have anything left over? Then you don't have any savings. So if you factor in savings as an expense, then you'll be sure to have some money set aside.
That's a good point. How should teens and young adults go about creating a spending plan?
So for teens and young adults, I think one of the hardest things for them when they're thinking about a spending plan is having a consistent source of income.
Okay.
And so this is where I really like to encourage parents that if they are thinking about offering an allowance, they really should do so and be consistent with it. Just like, an adult who's working can consistently rely on getting a paycheck every, week or every 2 weeks. And that helps you to budget. The consistency of knowing when the money comes in helps you to budget. And so for teens, I would say they also need a consistent stream of money so that they know exactly how much they have and how much they can spend.
So for natural spenders like myself, because I just can't not spend, sticking to a spending plan would be wouldn't be easy. So what are some practical things natural spenders should do to curb their spending?
So I would say maybe think about carrying cash if you feel like small amounts of cash, if you think it's safe, as opposed to using the debit card. Because what I found with the debit card is when you're swiping, it's harder for you to keep track of exactly how much money you have left in the account, because you're not really scrutinizing the receipts or your balance.
I've always thought it the other way around, rather carry the card than the cash, because the cash is more easy to just
the cash is easy to spend, but if you are the one who are going to the ATM machine to get the cash, then you can consciously make that decision of how much cash am I going to spend this day or this week. And then once the cash is gone, then you can hopefully stop spending at that point.
That's actually a really great tip, because personally as a college student, I know I just swipe all the time because it's hard to keep cash on me, and having to go to the bank and take out money would honestly make me think about the purchases I make and what I'm spending my money on. So I think that's a great point. Devon also brought up a good point. We should be learning about all of this before we get to college. Why do you think financial literacy isn't emphasized in the educational system?
Well, I think there might be an assumption that it's something that should be taught at home. Yeah. In some homes it is taught, but in a lot of homes it's not. So I always encourage students, young adults, parents to just start having conversations about it at home. And if it's something that you really want to have more of as part of your formal education, then talk to your teachers about it too and see if they can work it into the curriculum.
Okay, because I've read that only 4 states require high school students to take personal finance classes, and I think it's a big deal that we know how to manage our money.
So since finances aren't really taught in school, we learn our stuff about finances from our parents. And I know you yourself, you have 2 young ones. Shout out to the 2 young ones. So and I know they do take advantage of, your spending. So my question is, at what age should parents start telling their children about money and teaching them how to, go about spending money?
Well, I think, with most things with kids, you talk to them when they're ready to talk to you about it, when they're ready to have the conversation, and you have age-appropriate conversations with them about it.
Else, yeah.